All right. Good morning. Good morning, you guys. Welcome back to another live stream. Thanks so much for being here. We've got some stuff to do. We got some stuff to talk about. We've got the euro moving today, which is definitely interesting stuff. So hello to everybody in the stream chat with me. I see Theo, Tyrell, Junior, Ahmed, How TV, Hesera, Mansoor, Sone, Parviz maybe, Willie, Umair, Helmi. Hello, you guys. How you doing? Welcome back. So I figured what we would do today is I want to look at the heat map to start out. And as you know, if you're tuning in for the first time, if you've never been to one of my streams before, or you're watching this back at a later time, I just want to say before we get too far into this that I do these Monday through Friday at 9 a.m. Eastern. I'm sure for you guys who are here regularly, you know this already, but for the newer people out there who want to take advantage of these free streams more often, you can come out and hang out with me anytime during this Monday through Friday, 9 in the morning. So for some of you guys, I know it's in the afternoon, but getting a lot of good mornings and hellos from those of you guys in the chat. So shout out to everybody who is here with me live. Like I said, you guys can join me in the future live if you would like. All you have to do is show up at the time that we do the streams. Okay, so let's get into it. So we've got some interesting stuff going on here this morning. We've got the euro looking really strong this morning, and then we've got things like the CAD looking very weak, the Aussie looking a little bit mixed, and then you've also got the New Zealand looking mixed. So I wanted to break this down for you guys and see what's going on, but I would say that the big focus today seems like a bit of a pullback in some of these yen pairs and the euro pairs. As you can see, there's a little bit of a bullish pressure today on the euro and the yen. So, Phil says, I hope everyone is having a good day. I agree with Phil. I hope you guys are all doing well, and I'm glad that we can kind of come together here on YouTube and just spend a little bit of time together. I don't know where you are in the world. I don't know what you're up to, but I hope we can just make your day a little bit better just by hanging out and talking trading. If you're struggling with your trading, please know there's a lot of people who struggle with trading as gambling. They're addicted to it. If that's you, if you're struggling with that stuff, chill out, go to a demo account for a little while and just enjoy streams and enjoy content for a little bit while you sort of feel a little bit more confident. There's no problem or there's no issue. Some traders feel like, because they're trading, they need to be actively making money all the time. And then when they're not making money, they feel bad, or they feel like, they're wasting time. But the reality is it's not a waste of time if you're looking at things and you're saying, hey, you know what? I'm taking time to improve. I'm taking time to focus on my craft. There is no harm in taking this stuff slow. So I invite you guys, if you're newer, if you're struggling, sit back. Let's talk about trading. Let's see if I can help you with anything. And let's see if we can maybe just exchange some ideas that we would all benefit from. So let's start with euro dollar. So I said we just looked at the heat map. By the way, for those of you guys who want that, anytime you want, you can just head over to a1trading.com and then go to the currency heat map right here. And then you can check it out and go through and see what's moving on any given day. It just shows you sort of an overall view of the daily motion in the markets. I like it because it just gives me an idea of where to look in terms of what is moving. So Euro USD is the first one I want to talk about. So remember, I just said that Euro strength seems to be the story today. You can see that this pullback off of the lows seems to be holding pretty nicely. I think that at this point, it does look like Euro dollar. The Euro might get a little bit more of a bump and probably wants to head up to 1.2 really. This zone here is one that I'm keeping my eye on as a potential sell. I've talked about that a few weeks now. Looking at this sort of low that we formed, it was due for a pullback. It does seem like that's where we're headed, and I think that a logical place for bulls to want to push this thing to is to try and jump all the way back up to 1.2. I think from there, however, you've got sellers who are going to be interested, and people who think that this trend is going lower are going to try and step in and defend it. It's all one big battle right here in the currency market. People think of it as just lines on charts, but it really is sort of a Game of Thrones. You are talking about the European economy versus the U.S. economy, and we're trying to make a bet as to which one we think will outperform. Well, if the trend helps us at all, I think right now it should continue to be, favoring the U.S. economy in this sort of shift that we've seen in the last several, months, ever since the beginning of 2021. The U.S. has sort of outperformed here in terms of an economy, and so I think that has potential to continue. So me wanting to take that bet, what I am looking for is I'm looking for pullback opportunities that give me a good technical plus a good fundamental reason for a trade. So that is what I'm looking for. So as we do pull back here, I'd be interested in taking any sort of sells that set up. But again, these are just my opinions. I'm not here to tell you what to do with your account. Like, please don't take this as, oh, Nick said, go short the euro 1.2. It's a guaranteed trade. It absolutely is not. We can all be wrong, and that's the reality of trading. So for me, though, I think that the risk reward is pretty decent up here. And for me, what that would mean is probably taking a trade with some sort of small stop and looking to see if we can get the rollover. If it does roll over, then great. We can try and catch the next leg of this trend. But if it sort of breaks and continues the other way, then we might have to rethink some things. And that's the reality of trading, is that we don't know what's going to happen. All we can do is make probability-based decisions and manage our risk. And we can only, do our best. We can't know what's going to happen in the market. We don't control the market, unfortunately. So that's what I'm looking for on the Euro USD. This is a daily chart, so this is a bigger picture. I think if we drop it down to the 4-hour chart, for those of you guys who are watching the lower time frames, we do have this little uptrend. So if you're in a buy trade, if you're riding some of this upward movement, like I said, I think one place to keep an eye on is, of course, where sellers could get strong up in here. That's still a little ways away. So if you're holding on to long positions, if things are running for you, there's still 40 to 50 pips there before we really reach into a level of resistance that I'll have my eye on. But we'll see if price can extend up to that point. So we do kind of have this what looks to be like a breakout today. So we had this period of consolidation, price breaks right through, and let's see if we can get the follow through maybe up to that point there at 1.2. So that's what I'm watching for on Euro USD. I think I'm sort of patiently waiting with I'm sitting on my hands right now, seeing if we can get that last move to where I'd be interested in looking for potential sell pressure. And we'll be able to see this even better on the 1-hour chart, I think. This counter trend uptrend right now, you see sort of a shift in the direction of the euro dollar right now. On the lower time frames, you can see, yes, there are some higher lows. Yes, we've got some buy pressure here, and now even the breakout this morning on the euro pairs or euro dollar, especially as we break through yesterday's high. So not bad, or not yesterday, but well, I guess yes, yesterday. I'm getting my days mixed up. But you see what I mean? And I think, this breakout has the potential to do one of these and make its way up to that 1.2 level. That's where I'm going to keep an eye on in terms of where I'm interested in potentially taking some sell setups. Again, from there, I'll have to make the decision. But if you want to see any of the trades that I take, so what I do is inside of our private group is I share every trade that I take. So if I enter into a short position and put a stop somewhere in there, and I put a target or I trail my stops or whatever I do, I share that inside of our private Discord. So the reason I do that is it is sort of a way to journal my own trades. But you can see here, here's an example of a sell trade that I took. I think this was last week. This one didn't work out. I tried for this euro dollar sell right here, ended up getting stopped out fairly quickly on that one, which is no fun. But the idea is still the same. It's not a signal. It's more me telling you, like, hey, I'm selling the euro dollar for X, Y, and Z reasonings. Here's where I'm looking to get short or long or whatever, and here's why. So if that sounds interesting to you, there's chat rooms and there's trade ideas being shared by some of our more experienced members. We also have a research section. We have other analysts inside of our group. We have live webinars, educational material, all sorts of stuff. So if any of this sounds helpful to you, if you have any interest, feel free to check out the link down below in the description and use the promo code there, YTLive. It'll get you guys a discount for those of you guys who hang out with me live on stream. But if you have any interest in joining the community, that is how. So that's what I'm thinking on euro dollar. So I'll keep an eye on that. And again, if I take any trades, I will share that inside of the group. Okay, so pound dollar is going to be our next one here this morning. Pound dollar. Still just range bound in my view. So we sort of rounded off the bottom here, right? We shot off here, we came back into this sort of area, and then we have continued to sort of just hold this low. Until this breaks, I'm going to view it as support, and I think that there's more bullish energy, more bullish interest up in these or down in these areas, right? In this zone, I think you have buyers right now. If that changes, or one of the big things to watch for is if that does change, we see this sort of move, then absolutely could see myself looking for shorts in favor of the US dollar. So shorting the pound, looking for the dollar, buying the dollar, right? But that is not the case just yet. That would have to be, some sort of fundamental catalyst, right? Maybe something is said, maybe something looks really good for the dollar, or the UK misses numbers, something like that, right? I like to look for a catalyst in my trade. So, if you have watched my streams, or maybe you're newer to my streams, a lot of what you see on the internet about trading is highly technical, right? It's highly technical analysis. It's use the moving averages and the RSI and the support and resistance. And while I do like that stuff, I also find it very important for my trading to understand what I'm doing and why. I've used recently the euro dollar example because this is one of my favorite trades, and I know we were just looking at it, but let me just explain this. I like the euro dollar because I am very fundamentally bearish on the euro and bullish on the US dollar at this time. The reason for that is because when we are betting currency, when we're trading currency for other currency, again, a lot of times when you're on the internet, all you're seeing is, you trade the head and shoulders, right? And that'll make you money. And maybe it works for you, maybe it doesn't. But the idea is when we're looking at currencies, to me, it's valuable to understand why we would be buying one at all. Why would you want to buy a currency? Well, you're making a bet, whether you know it or not, on that economy, essentially, right? So I want to bet on the US dollar because I think that the US economy has the potential to outperform the euro area at this time. There's a multitude of reasons. I'm no like economics professional or anything like that, but I feel like I know enough, right, to get a general idea of what the trends are looking like, what the future is likely to look like. I don't know what the future is going to look like, but I have a idea based on what we're seeing, the trends forming, that gives me a bias. Can I be wrong? Absolutely. But the idea is, as long as you're a little bit more right than you're wrong, you can make money. So for me, this is where I'm at with the euro dollar. Well, with the pound dollar, it's a little bit different because the pound is sort of strong, and so is the dollar. So when I'm going against two currencies that I think are a bargain, then I have less interest in trading it. Because for me, I'd prefer to say, well, if I was bearish on one and bullish on the other, remember when we trade currency pairs, we're trading two at once. We're trading one against the other. You have to pick one that you want to sell, and you have to pick one that you want to buy. So for me, if I want to buy both, then I probably don't want to trade that pair. That's just how I look at it. You might not care so much about that. I know a lot of people, they don't care about technicals, about fundamentals. For example, Joe Barreca, he's one of our coaches. He is a highly technical trader, and he does not look at the fundamentals at all. At least according to what he says, he's minimal, right? And I'm a little bit more mixed, and that's okay, right? There's different people who look at different things. What matters is you find something that is the most comfortable to you. For me, if I'm going to be selling and buying currencies, I need to understand the catalyst behind why I might do that. Okay. So Keto says pound pairs are dropping. Let's look at some other ones. Pound yen, what's that one looking like? I bet that one is selling off today. Yep, look at this. So for those of you guys who are pound yen bears on the short term, check this out. So I think pound yen, if it does pull back, if sellers are going to stay strong, magnet area is going to be this one right here, 148.5. So I think price is probably headed there. And for the traders on the shorter time frames here, you guys, I think there might be some good breakout opportunities. Let's remove these for just a moment and talk about this. So if you think pound yen is going to have a continued slip lower, check this one out. You've got this sort of barrier here at the bottom of this this little consolidation zone, right? So you had like an extension down, right? And then you enter into this little range. And then the idea would be here, something like this, right? If you're just looking at a pattern, right? A very simple technical pattern here. If you think price is going to pull back to 148.5, which I think it likely will, especially if sellers stay strong here. If sellers go strong, I think the next area, the next magnet zone, if you will, is a shot right down to 148.5. Well, there might be, for the intraday traders out there might be something like this to watch out for, right? The break, the retest, and going short, going headed down to that 148.5. That's what I'm at least thinking on this this pound yen move here. I'm not super interested personally in selling the pound yen, just because this thing is in a strong uptrend. But for the intraday traders out there, I'm more of a swing trader myself, but for the intraday traders there's still 150 pips to the pullback there. For me, I'd be more interested in buying should price come down to that zone. But that's one thing that I'm keeping an eye on pound yen. So I like this pair long if we get the move there. But for the sellers on the short term, maybe there's some room for some breakout trades there, just catching the move short term. Phil says, I've just been stopped down on pound Canadian. I went 60 pips profit, so I set stop loss to break even. Hey, Phil, you know what? There's worse situations than that. Let me tell you, that's cool, because look, if you're up and then, you must have been, you're up on the trade somewhere in here, and then you move stops to break even. Taking a break even on the day, there's no harm, no foul there. I mean, yes, it's a little bit frustrating because we all would prefer to make money, but the reality of trading is sometimes you get moves like this, right? The daily bar that looks kind of gross like that. Like, oh, it's looking like it's going to keep going, and then bam, right? It just shoots right back down. And that stuff happens. And personally, that's why I like trailing stops in, is because sometimes you just get these weird moves, right? You get these weird snapbacks in the market. And pound CAD seems to be doing that a lot recently. You got shots up and then spikes back the other direction. So, Nick, how does CPI affect the currency? CPI is inflation measurements, right? Inflation is a fun topic that I could spend 30 minutes on, but the basic idea is higher inflation. It's kind of weird because you think of like, oh, inflation, the currency must be going down because they're printing a lot of it, right? Well, a higher CPI number is actually kind of bullish, because if CPI is higher, the central banks are going to be prompted more likely to raise interest rates. Let me show you why. So very simple. Good question, by the way. I love this stuff. When you have CPI rising, that's a measurement of inflation. When inflation is rising, that's usually a sign, like in a lot of cases, it's a sign that an economy is sort of growing quickly, right? It's growing quickly and prices are rising very quickly. And then people say, okay, well, the central banks see these numbers coming out. Okay, higher CPI, higher inflation. We need to slow down that inflation to a healthier rate, right? Well, then what? The central banks say, well, what can we do to slow down inflation like that, make our currency less interesting like that? Well, we can raise rates. If inflation is rising, we can raise rates, which raising rates, am I getting this backwards? I'm getting confused today. Higher inflation means that the economy is growing quickly. So actually it might be the other way, right? Cut rates. But the idea is keeping an eye on inflation to determine, what the central banks may do with interest rates. Because rising interest rates, right, when they're hiking interest rates, that is considered bullish for the currency, because it's kind of like, if you're familiar with stocks, it's kind of like a dividend, right? So if you're watching a stock and the dividend is 2%, then yeah, that's sort of enticing. You're like, well, I could buy the stock and then get a little bit of dividend as well. But what if they raise that dividend to 3%? Well, now it's more interesting, right? Well, this is exactly what's happening with central banks when they raise and lower interest rates. A move down in rate is less attractive to people who want to buy the currency, and a raise in rates is more attractive for a currency because people want to buy that currency to capture the interest that it pays out in those banks, right? Higher inflation means an increase in the overall performance of the economy. In most situations, I believe that is correct, unless you're talking like hyperinflation, which is really dangerous, right? Nick, is it easier to trade a small account or a big account? For example, which would be easier to trade, a $100 or a $1,000? Definitely a $1,000, because even on a $100 account, I think $100 personally might not be a popular opinion, but I think it's almost too small for trading, because even a 0.01 lot size position is quite big on some of the currency pairs. If you're trading with $100, like, you definitely can't trade gold, right? Because gold would smoke you. Even a small move against you could blow a $100 account very quickly. You could, with $100 with the 0.01, you definitely would, in my opinion, would stick to the lower volatility currency pairs like Euro dollar, dollar Swiss, Aussie Swiss, and trade small, right? Because the thing is, when you talk about 0.01 and then you have big pip movers like GJ and gold and pound dollar, those things can smoke a little account like that. So there's not an easier or harder, it's just trading, right? You're just making decisions and managing risk. But if you can't manage risk properly because your account size is too small, then that's going to be next to impossible. With $1,000, I think it's much easier, because if you ignore the dollar amount for a second, you have more like flexibility in terms of risk management. You can trade more currency pairs. You can risk manage a little bit more accurately with a little bit more capital, right? So that would be my thought. All right, so let's look at dollar Swiss here right now. So dollar Swiss is still pulling back here and looks interesting, as we do get a little bit of a spike to the downside here. In the last several days, we've seen price head down from this recent top, really caught a sell as people sort of moved into sort of these Swiss franc and the yen in the last week or so, last week or two, we've really seen a push into these more safe haven currencies. Now, with that said, I still am bullish on this pair. I still think it has potential to the upside. This is the daily chart. We could look at the 4-hour for a moment and talk about this one as well. So again, you can really see this level has held multiple times. If it does break, I think it has room to really send dollar Swiss lower. I'm not going to jump to conclusions on that, but if it does move lower, I think you probably get a move. I mean, the next major area you've got is it's not super clear, to be honest with you. Yeah, honestly, there's not like a super clear. I mean, I guess you could make the argument here, but that's so close. If it really were to really break down, I think you probably have a move down to this point here. So that's sort of the next level of demand, at least that I see on dollar Swiss. So if that one breaks, I'll probably take a break from looking at this pair to see where it goes. But again, right now where we're at sort of the lower extreme of this support zone, testing to see if buyers can hold this. I think personally that this is, not the worst buy ever. I like this opportunity. I have some Swiss trades on right now to see if we can catch a little bit of reversal. We'll see if it works. If it doesn't, I'll stop out and cry, but it happens, right? I'm kidding. You shouldn't cry from your trades. If you're crying from your trades, then your positions might be a little bit too big. A lot of times people get into this stuff thinking they're gonna take a small account and move it into a really big account. And I hate to be like the negative person, or like, oh, you're not gonna be able to do that, but like the reality is the markets just do not work that way. The markets, like, let's be honest for a second. Are the markets really set up for the little guy to come in and make big amounts of money? Probably not, right? They're very much oriented towards the slow and steady, patient people that make a lot of money over time. Warren Buffett, he has a quote that's really awesome. It's something along the lines of the stock market, same with the Forex market, but basically the markets are an instrument for the impatient people to pay the patient people. I'm saying that completely wrong, but the idea is basically the markets pay patient people and they take money from impatient people. So people who want to make money very quickly in the markets usually get stomped. And the people who are slow, steady, and they sit for years and years and years, trading passively or trading, conservatively or investing conservatively, those usually are the people who actually walk away with money. So keep that in mind. Don't rush the process and don't try and make a bunch of money on a small account. I'm telling you, if you trust me on one thing on my channel, trust me when I say I get way too many emails, messages, DMs, people saying, Nick, I lost everything trading XYZ. People who just said, I took $100, I took $500, I borrowed $1,000, and I blew it because I traded gold and I wanted to make a lot of money and I wanted to make 20% a month and all this nonsense. Like, trust me, I have heard it so many times. I've got a YouTube channel here that's been fortunate enough to grow. And with that, however, I've just heard so many nightmare stories. So please don't be the next one, right? Trade slow, trade conservative. Understand that if you want to make money in this, it's not going to be quick, big money. It's going to be slow, steady money if you get really good at it. So a lot easier said than done. So just please, I'm telling you the truth. I have nothing to gain. There's way more money in selling a dream, but that's just not what we do on this channel. All right, Aussie dollar is our next one here. Aussie dollar is pulling back to the lows of this zone here, similar to what we just talked about on USD Swiss. It looks like it's coming down to hover into the lower extreme of sort of a major shelf area, if you will, where buyers previously were very strong. We'll see if the Aussie can rally here, if we can get some strength on this one. But it does seem like this thing is just in consolidation mode, so I don't really have anything to say in terms of like, oh, it's looking like it's going to do this. Right now, it just looks like it's deciding. Right now, it's sitting on a support level, chopping, and that could lead to a big spike to the upside or a big spike to the downside. And I'd be fooling you or trying to fool you if I told you I knew exactly which way it's going. I don't. And so for me, the biggest thing here is, if anything, I think that if the trend is your friend, if the trend does decide to continue, that there could be some decent risk reward looking for a trade in here. If you do think it's going to go long, if you think that there's opportunities like this, right? If you think that Aussie is going to continue to be strong, as it has been one of the top performers, it was in 2020, 2021, it's been sort of an underperformer. But if you think it's going to rally back and continue that upward trend, then the Aussie dollar could be an interesting one to keep an eye on at this 0.76 level. So, if you were to take a trade here, the cool thing here, this is why I love trend following as well, is like when you're sitting at this zone, you've got a pullback into a nice level of support. Let's say you did take the trade here and you were willing to just risk a small amount. You say, hey, you know what? If price starts to break where this zone is at, I can risk 100 pips or so and say, hey, you know what? On the upside, I have a potential just if we went back to the previous high, right? If you just caught, the next move on this overall trend, if you caught that, there's 375 pips to the upside, and there's, a risk of what, 100 pips there on the downside? Not so bad. And I think that is a decent trade setup, if anything. Right now, I see a lot of trade setups in the market. I like these risk-on currencies pulling back. And so I've been sort of looking for trade opportunities myself, taking a couple losers recently. Hopefully we can turn that around. But it is what it is. If you're gonna catch fish, sometimes you got to cast the line for nothing, right? So that's what I'm thinking on Aussie dollar. Let's look at gold. I see some requests for gold in the chat. We'll try and take a look at that. So gold sort of spiked up and then caught some seller resistance. And I talked about this. I'm not going to say I told you so or anything like that, but I told you so. On gold on the 4-hour chart here. So we came into a level of resistance, and what I said last week is I said, I want to see a spike in the COT reports. We did see that. So the COT reports did show a little bit of bullish pressure. So the big money, if you're not familiar with COT reports, it's the commitment of traders report, and it's required. I think it's like an SEC required thing where institutional money that holds large holdings in the futures market has to release their holdings on a weekly basis. That is available. You can find that on the website. So if you go over to a1trading.com, go to our website and check this out. What did I just do? If I go over to market data, COT reports, check this out. Look at this. So this is the COT report. So at any time, you can go onto our website and you can take a look at what big players are doing on the Canadian dollar, the Japanese yen, the Swiss franc, the S&P 500, gold, silver, oil, Bitcoin, the treasury notes, whatever you want to look at. Also, if you're not already, you can sign up while you're on here. You can sign up for our COT data newsletter, where we basically share our analysis on this stuff fairly frequently. So if you have any interest in this, again, head over to a1trading.com, go to the COT reports tab, and you have access to this for free. So we're talking about gold. So I wanted to show you guys what I mentioned. So let's go look at gold for a moment. We'll talk about this. So gold had sort of a shift on the non-commercials. The non-commercials are the one that I care about because the non-commercials are your hedge funds, institutions, leverage funds, things like that. Okay, so we did get a shift. We saw for the first time here in a minute a sort of decisive move into gold. So we saw some smart money, some big money, right? Make a move into gold for the last week, which is a big deal because that potentially has room to turn into an uptrend. When you get these big spikes, look what happened, last time. So COT report data came out and then they kept buying for a little while. Sure, it's a little bit slow. That's months of data, right? But you can see, and it's not always going to be perfect. Here's a spike where we got a little bit more buying after this for the coming weeks. Here's a sell-off when it's sell off for a couple while, right? A couple weeks after. So this could be due for a continued push to the upside. So gold might be a time to think about gold here, especially with concerns about inflation and that sort of thing. So as gold does get a little bit of a bounce here, we did see this rally in the last week or so. However, what I mentioned was that I want to be careful about jumping to conclusions on gold being a buy, just because we've got some strong sell pressure zones all up in here, right? We got sellers all around here that are holding these zones. They're selling into these zones historically, so we've got to be careful in case they want to come back and smack gold down again in the future here. And that's exactly what we saw here as price rallied into this level here. So we talked about this, we marked it, and we said, hey, I want to watch to see, I said I want to watch to see for a break of these zones. I want to see a little bit of buy pressure, enough to get me interested that sellers are not able to just control this price. And that so far seems to be the case. Sellers are still strong enough to hold this. So what I'm watching for is, as we approach this again, can we break through it? Can we do one of these and see some nice buying demand that lasts, right? We got the double bottom, but this is sort of the testament to see, are we just consolidating before our next shoot lower? Or is it time for gold to really catch a bid? I do want to say, I think that it does look promising here after this double bottom, but I'm just going to be careful because we are still counter trend. Does this make sense? The big idea here is I would be more interested in a gold trade, a long trade specifically, if we see this. So if we see a break, the trade that I'd be interested in is right here. Something like that. And please remember, just because I say something or just because I think something does not mean it is absolute truth. I am wrong about as often as I am right. But the idea is to let the winners count a little bit more, right? So I could be right about gold. I could be wrong about gold. But if I'm right and we get something like this, I can make some good money. If I'm wrong and it just does something like this and I just get spiked into a trade, I'll take a small loss and I'll just own it, right? Yeah. So looks like market structure will control gold this time around. For now, it does seem like structure is in favor of the sellers. What is the best multiplier for your trading style, and how do you put your money after you lose trade? For example, you lost 1% from 10K, $100 loss. Do you put 10K again, or do you put 9.9K? That's a good question, Edgars. So I trade with 1% relative. So it's not a fixed number. It's a 1% relative. So if I go down, I'm still risking 1% or some percent, right? I grade my trades, so not every single trade is the same position size. So usually, if it's a more promising trade, meaning it has more confluence and more reasoning behind why I would want to buy or sell, then I might take a slightly larger position, not by a drastic amount, but by some. Hope that helps. I want to start with 100 pounds. What's the best lot size? Can someone tell me, please? If you're trading 100 pounds, definitely 0.01 is probably the only one to even consider. Of course, do what you want, but if I was trading 100 pounds, I think I would stick to 0.01 lots. In fact, I probably wouldn't even trade 100 pounds. I'd probably trade at least 300 or 400, because 100 is so small that, like I said earlier, even 0.01 can be too big for 100 pounds. What's GJ up to? Let's look. So GJ still sort of holding this zone for now. We'll see if it wants to break lower, but I mentioned earlier the idea of watching this consolidation zone. Should it break, something like this could be in play, could be worth watching for. Definitely an idea. What about dollar yen? I haven't looked at dollar yen yet. Very similar. Dollar yen got this level here. If that breaks, I think you probably head down to 108.5. But again, just going to depend on what the yen does overall, because it seems like the play right now is on the yen, as yen strength is up today. So we got a lot of buyers of the yen stepping up. We are sort of hanging out at this zone. I'm surprised I didn't have that marked already. But we have some buyers in this area. So, the big test is, can buyers hold this, right? If that happens, if you get the break of this structure, it could be great for the dollar yen to continue to rise. However, it does seem like yen strength is in play right now, so I would just be cautious for the potential slip right down to 108.5. So if you're a super bull on the dollar yen, then maybe we have some room for pullback plays here. What about the fibs? Is there any fibs here that might be useful? Yeah, so because if you're drawing a fib from like here to here, if the pullback just makes it to 38.2, you've still got to move down here. So that level looks a little bit more attractive to me, especially after all this rallying. A lot of times when you get these really long extended rallies, they are followed by sort of sharper pullbacks, right? See if we can, well, here's a great example. Sharp rally to the downside, shot right back, right? It's not always, but a lot of times that's what we see. We see these sort of sharp bounce backs after sharp moves. There's a big sharp move, big rally back the other way. It's not every time, and I wouldn't want to sort of conclude that. You can see here's one where it rallied, followed by a rally, followed by a rally, followed by a rally, followed by a pullback. Right, so it's not that easy, but the idea is just to be cautious for, as we are pulling back here, for this to become sort of a bigger pullback than maybe some traders expect. So for me, if I was to take the risk, I'd be more interested down here just for a little bit sharper of a pullback. We've tested this zone. You can see we did sort of try and make a bounce off there, but we didn't sort of decisively move higher. We sort of just bounced off of that level and pulled back briefly. So that's what I'm looking at on dollar yen. What about pound dollar? We did that one earlier, so you can check that out just by going back in the stream. NZD USD, same as Aussie dollar most likely. Yep, sort of just consolidating. It does look like, if anything, this is a demand zone to see if we can rally off that. But again, we've been in consolidation, so there's no clear direction here yet. And I wouldn't jump to conclusions. It could spike the other direction as well. So when we're in consolidation like this, we don't have like a decisive mover. And this is a pair that I'm mostly uninterested in because I'm bullish on both the US dollar and the New Zealand dollar from a fundamental perspective. If anything, though, it does look like the overall trend here at the 50% level looks like we could continue to sort of move higher in favor of this upward trend. Above the 200-day, nice pullback on the fibs. The New Zealand currency has gotten beaten down a little bit recently, and I think has potential to sort of bounce back. So we'll see. Also going to depend on sort of global outlook, because in the scenario that we see recovery continue, the New Zealand likely will do well. But in the case that we see, more fears come up and more things happening in the world that are not so good, if that happens further, then the New Zealand dollar, we could probably expect to see more dip to the downside, as the New Zealand currency is heavily impacted by trade. And when the world shuts down, that is bad for trade, right? Swiss yen, sure, we'll take a look at it. Swiss yen for Sergi. So for Swiss yen, this one really is another one that I'm just not super interested in. The very basic idea is because the Swiss and the yen are both risk-off currencies. They're both considered safe havens. Their economies are both slow growers, slow steady growers, right? So trading one against the other is not super interesting to me, because you're talking about two economies that mostly are in the same boat. They're both sort of either both going to go up. Usually they both go up or they both go down. So that causes the Swiss yen to be a very choppy pair, right? You can see very choppy, choppy, choppy. Not always. There are cases where, the Swiss outperforms or underperforms the yen. But right now, just from just a pure technical view, you can see, nice demand here. We were coming into resistance. If anything, like personally, if I was looking at this, I would just respect the chop. I would just respect back and forth. So if I was looking at this, I would say, hey, you know what? This looks a little bit more top heavy than extension. However, the trend overall is up. So I would not rule out the idea of something like this. So if I was looking at this, maybe a stop above here, looking for a move back down could be worth thinking about. Again, please remember, this is not financial advice, not me telling you to go take those trades. It's just me sharing my thoughts and, ranting a little bit. But that's the thought on Swiss yen. Is this pair is more favorable to range bound traders, in my opinion. It's better for people who like to trade back and forth, not so good for trend followers like myself. So yeah, if anything, I would just say, as we reach the upper extremes, I'd be more interested in closing positions or selling them, selling short, something like that. So that's what I'm looking at. Hope that's helpful. Nick, are you ignoring me? No, there's just a lot of messages. I'm sorry. That's going to be it for me, you guys. Thanks so much for tuning in today. I've got some other things I want to get to. For those of you guys who are inside of the private group, please remember, if I take any trades or update any positions, I will share those with you there. Sometimes I get the question asking, Nick, when are you going to update them? I update them anytime I make any action on my trading situations. So check that out. There is a link down below in the description if you'd like to join our private group. Again, it looks like this. We'll pull it up. I share my trades, wins and losses, whatever's going on in my trading account. I basically share the full reasons. So fundamental analysis, technical analysis. Sometimes I'll link articles done by our team. We've got a couple different writers that work with us to create some of the more fresh research that we talk about here on the streams. So again, there's webinars. You can join and see all the trades that I take, as well as Frank and Patrick, who are also experienced traders as well. You've got Joe Barreca. He's one of our top traders and analysts inside of the group as well. We've got some research that we're doing, like I mentioned just a second ago. So some of our writers are working to create sort of like coverage of the most recent stuff, and they put it out for members as well. So we've got the chat room and all that sort of stuff. So if any of this sounds helpful to you, then definitely check it out. There's a link down below in the description if you want to join our private group, and maybe we'll see some of you guys in there. There's a discount code also before you check that out. Make sure to use the discount code YT Live. It gives you, I think it's $5 off, or it's 25% off the gold membership. So check that out if you have any interest. Thank you guys so much for being here. I hope you have a great rest of your day, and we'll see you back in the next one.